Are you at the crossroads of choosing a trading style and unsure whether swing trading or day trading suits you best? Both strategies offer exciting opportunities, but they cater to different types of traders with unique goals, risk tolerances, and time commitments. In this comprehensive guide, we'll explore the ins and outs of both swing and day trading to help you make the right decision for your trading journey. By the end of this video, you'll have a clear understanding of which path aligns with your aspirations. What is swing trading? Swing trading is a medium-term trading strategy focused on capturing price movements over several days or weeks. How it works. Swing traders analyze trends, patterns, and technical indicators to find opportunities. The goal is to profit from market swings, holding positions long enough to capitalize on larger price movements while minimizing day-to-day noise. Who it's for? Swing trading is ideal for individuals who cannot dedicate full-time hours to trading, but still want to actively participate in the markets. It's also suited for those who prefer a slower-paced approach. What is day trading? Day trading involves buying and selling financial instruments within the same trading day. No positions are held overnight, and the focus is on making quick, smaller profits from intraday price movements. How it works. Day traders monitor charts in real time, using short-term technical indicators and market data to make rapid decisions. The strategy relies on high-volume trading and frequent trades. Who it's for? Day trading appeals to those who thrive in a high-energy, fast-paced environment and can dedicate their full attention to the markets during trading hours. The advantages of swing trading. 1. Time flexibility. Swing trading doesn't require constant monitoring of the markets. You can analyze charts after market hours and make informed decisions. 2. Larger profits per trade. Since swing trading focuses on broader price movements, profits from each trade are typically larger than in day trading. 3. Lower transaction costs. With fewer trades, you'll pay less in commissions and fees, which can significantly add up for frequent traders. 4. Easier on beginners. Swing trading allows more time for research and strategy execution, making it a better fit for those just starting out. The challenges of swing trading. 1. Overnight risk. Holding positions overnight exposes you to risks from unexpected news, earnings reports, or geopolitical events that can cause significant price gaps. 2. Patience required. It can take days or even weeks for trades to play out, testing your patience and discipline. 3. Missing immediate opportunities. Swing traders might miss out on intraday volatility where quick profits could be made. The advantages of day trading. 1. No overnight risk. By closing all positions before the market closes, day traders avoid risks from after-hours market activity. 2. Quick results. Day trading offers immediate feedback as trades are completed within a single day. 3. Multiple opportunities daily. With several trades made each day, there are frequent chances to profit. 4. Skill development. The fast pace of day trading can accelerate your learning curve, sharpening your analytical and decision-making skills. The challenges of day trading. 1. High time commitment. Day trading requires full attention during market hours, which can be a challenge for those with other responsibilities. 2. Emotional stress. Rapid decision-making in a volatile environment can be mentally taxing, leading to emotional fatigue. 3. High transaction costs. The frequent buying and selling lead to higher fees, which can eat into profits. 4. Risk of overtrading. The urge to chase profits can lead to overtrading, increasing the potential for losses. How to choose between swing trading and day trading. When deciding which trading style is right for you, consider the following factors. 1. Your time availability. Swing trading works best for those with limited daily availability. Day trading requires a dedicated schedule during market hours. 2. Your risk tolerance. Swing trading involves overnight risks but offers a less stressful pace. Day trading is more intense but avoids overnight exposure. 3. Your financial goals. Swing trading is suited for medium to long-term growth. Day trading targets quick gains through frequent trades. 4. Your personality and discipline. Swing trading favors patient, analytical thinkers. Day trading suits fast decision-makers who can manage pressure. Tips for success in both approaches. For swing traders, use daily and weekly charts to spot trends and potential reversals. Stick to your stop-loss levels and profit targets. Research market fundamentals to complement technical analysis. For day traders, Develop a detailed trading plan and follow it consistently. Focus on highly liquid markets like Forex stocks or indices. Start with a demo account to practice before risking real money. For both, maintain a trading journal to track your progress and refine your strategy. Manage your risk by never risking more than a small percentage of your account on a single trade. Stay disciplined and avoid emotional trading. Both swing trading and day trading are viable paths to success in the financial markets. The choice comes down to your goals, lifestyle, and risk appetite. Swing trading provides flexibility, stability, and lower stress, making it great for part-time traders. Day trading offers rapid action, frequent opportunities, and the thrill of immediate results, ideal for full-time, adrenaline-seeking traders. Question for you: which trading style resonates with you more? Are you a patient swing trader or an action-packed day trader? Let us know in the comments. If you enjoyed this video, please give it a thumbs up, subscribe to our channel, and turn on notifications to stay updated on more tips and strategies. Until next time, happy trading and may your profits soar.